Morning all. How are we all doing? Morning Kenny, morning Stevie. Managed to make it on time. I'm still not very organised this morning, but I'm here. Morning Seymour. Totally disorganised this morning. Let me just shut down some of these tabs I don't need. That one. That one. Right. So just a quick scan through for the news. It's CPI day today. So I'd go to a spin class this morning. So I've literally just walked in the door, scoffed some breakfast, sat down at my desk. I haven't looked at anything. So I'm just going to quickly whiz through and just see if there's any overnight that's important. Aussie trade balance is up. That's positive. Japanese current account is up. Is that forecast 481 billion? Actual 1.8 trillion. Oh, that's yen. I always get confused with yen. There's about 6 billion yen in a pound, isn't there? So, Bank of Japan review due to skewed interest rates markets. Control. That's it. Fine. No news overnight, then. That's important. Today is big day. Big day. This is the day. CPI today, 1:30. So I'm going to stream at 1:20, not 2:20 this afternoon. Morning even, David. So I will be on early today. I'll need to change my stream, reschedule it. But yeah, it'll be 1:30, 1:20 today. So I can be on for CPI. I might, I've got positions on already on the US dollar. So I'm exposed on it already, but I might try with one of the other accounts and do a news scalp with the ORB indicator, ORB EA this afternoon. I tried to do it last week and screwed it up because I put the wrong times in. But garbage in, garbage out. So yeah, I'll have a go at that this afternoon probably. So that's it for news. We've just got literally the unemployment claims and CPI, but I've say just got. This is the most pivotal news we've got this month so far. So this is going to be a big mover. I really haven't got a clue. I can't forecast which way this thing's going to go today because inflation is a really mixed bag. It's negative for a currency. So when you get higher inflation rates, it's actually negative for a currency, but it's also at the very same time positive for a currency because it leads to higher interest rates, which is positive. So when these figures come out as green, what tends to happen a lot of the time is the currency goes up. So basically what they do is they class anything higher as a green figure. The reason they class it as a green figure is because it leads to higher interest rates, but it's actually negative for the currency. So it's a really complex leading indicator to actually read. And it also has quite an impact on the currency as to where it's been. So if you've got like US dollar CAD, for example, where all the US dollars, where we've had this big drop on the PMI figures, depending on whether the currency's been factoring in inflation drop or not will determine whether or not this goes up or down. So if all this movement we've seen negative US dollar is then factoring in lower inflation rates ahead of an interest rate rise, even if the interest rates come down, that will still go up because they've already factored in the move they were anticipating off of it. So the movement has already happened ahead of the news, in which case then you get the opposite, which is why people get confused with news events when something comes out in one direction and then it flies the other way, the way you wouldn't expect it to go. It's because they factored in that movement already. So potentially, this is, my confusion with why we're dropping on all the positive news we've had could be because of that. So again, we'll see this afternoon, but I really don't have a clue which way they're going to take this afternoon. It could go either way. So I've got exposure on Euro US dollar short. I've got 4 positions on that now. They're quite large positions as well, so I'm very exposed on this. So there is a possibility that I could pop this account this afternoon because obviously this is an evaluation. So I've got to adjust my stops ahead of the news because I've gone in too hard and too fast on it because I've been trading this now for over a week and haven't managed to get any moves on, so I've gone aggressive on Euro US dollar, waiting for this US dollar fade, which we haven't had yet. So yeah, but that's where I am. That's the problem with evaluations. I wouldn't care if it was my account. It's not a problem. I'm in 1% of drawdown. Obviously, on an evaluation account, I've got a maximum of 5 in a day. You know, I don't care about going 10 to 15% in drawdown. I do it all the time and survive very happily, making lots of money. But obviously, they don't want me to do it. So this is the problem when you're trying to position trade evaluations. One squeeze in the wrong direction and you're stuffed. But anyway, we'll see what happens this afternoon. So I'm exposed already. Pound US, Euro US, Euro Swiss that I got into yesterday. That 300 ADR level that I drew in. This morning, I was still in the trade. So we had I don't know if you got into this one with me yesterday, you had an opportunity to escape it yesterday. So this was an ADR reversal. You had a nice sort of 1.5 to 1 trade, 2 to 1 trade, potentially, something like that, depending where you got in. I didn't get out of it yesterday. We pulled back. What I was looking for yesterday was the retest drop, which we didn't get. We got a retest accumulation. This morning it pushed up. So I woke up this morning and I was very close to stopping out on it. And I thought, well, today, as they've now taken out the high of the day during Asia, they're going to do one of two things. They are either going to continue this move on weak Swiss franc, which is fine. And that if that is the Swiss franc now weak because of the news, then that's what will happen. Or they are going to fade it today. So if they're going to fade it today, I thought, well, I'll either add a position on and try and position trade it, or I'll just move my stop. So what I've done is I've just moved my stop up now to more risk. So I was risking 0.5%. I've decided to move that to a 1% risk. It won't go any higher than that. That'll be it. But what that allows me to do is, as you can see, allow an ADR move on this today. And then if they are going to take that liquidity and run with everybody that shorted the fade, which is now gone, that'll be a really nice trade today. And we can easily get back down into this propulsion move. So that's what I've done with the Euro Swiss. We're just about to get a reversal alert on that. It's coming down nicely at the moment, but obviously market's not really open yet. So yes, so I did that with the Euro Swiss. I don't normally move my stops when I use stops, but I normally use a 1 to 2 ADR stop, and I put a half ADR on it yesterday because I thought this, if it's going to go, is going to collapse, and it didn't. So I've just kind of moved it to a normal risk, basically. So you can see what I've got on. Same as usual. I've not gone anywhere. I'm still sitting in drawdown. Nothing's moving. I banked some oil yesterday, a little bit. I've got oil in profit at the moment. I've just got the one position left on that now. I was toying with the idea of putting that break even, but so what I am going to do, just reduce risk up rather. So that is yesterday's low. That is the previous day's low. So I'm just going to put my stop just below that previous day's low, just in case they come and try and grab liquidity off of the news, because obviously everything affects, CPI affects everything for the US. So we might find some movement on that, but I like the look of that oil. New Zealand dollar CAD. I mean, I've been in this now since here. 1, 2, 3, 4, 5, 6, 7, 8 days. Just sideways. Can't get any traction or anything. Pound US dollar. Been in it for 4 days. Sideways. No traction. Pound New Zealand. Been in it for the same amount of time. Sideways. You know, just nothing is moving. So I am just in everything still. Euro US dollar. So there's my 4 positions. 3 with the EA. Sorry, 2 with the EA. 2 manuals. Again, I'm aggressive on this. The idea behind this position is passing and getting this evaluation level done. So I'm aggressive on it. Euro Swiss, as I say, that's the ADR reversal from yesterday. And Aussie CAD, again, same thing. Not going anywhere. Sideways. Got in it somewhere around, I got in it here. Got in it again, got out. Got in it again, got out. I'm in it again. It's just not going anywhere. You know, story of my life at the minute. Right, ORBs. Market is open, 801. Don't need those. Oh, hang on. Let's put the DAX in there. Start. So trading the DAX, ORB. See where we go from here. on that account as well. So yeah, morning to your moms, morning Jane, morning David. If I didn't say hello, I think I did. ADRs, nothing so far this morning. Weeklies, obviously Euro Swiss is the only thing, because Euro Swiss went 300 ADR in, well, there's your 300 ADR that are drawing off that move. So we made 275, 250-ish yesterday. And then we've done the other 50 today or whatever. So 300 ADR move in one day, 24-hour period, basically, if you look at it. So it started there. We had that little bit. And with that little bit this morning, we've completed it. So from there to there is a 300 ADR move, which is 150% of its weekly range. It's just mental. So all the Swissies done the same thing, haven't they? Pushing up on pound Swiss this morning. US dollar Swiss is pushing. CAD Swiss is trying, and Aussie Swiss not quite so much. So we'll see. See how we go this morning on that one. I'll either stop out or not. RSIs. We've got 3 minutes to candle close on the 5 minute on the indices. Your video stream doesn't look very clear today. So go into your settings, Stevie, and make sure you've got it set on 1440p. You'll probably find that set to 480 or 720. I'm streaming in 1440. So if it's blurry, it's your end. It's usually that. This, I find, defaults to whatever it fancies a lot of the time. I mean, I've got a 300 and I don't know what my connection is. Mine's ridiculous, my speed. So I never have anything but 1440. Watch this. 360, 70. Go on. 380, 380. 380 meg anyway. So I don't have any problems with speed. Not my end anyway. Shouldn't be me. So yeah, RSIs. We've got a lot of RSIs. I'll look at those in a second. Just going to watch the 5 minute open and just see how volatile we are today. Intraday sentiment. Not a lot's changed on the Euro US dollar overnight. Still massively short. Everyone's still short Euro US dollar. We had somewhere between 55 to 60% short on pound US dollar yesterday. So the two major US dollar pairs, everyone is still short on it. So, you know, when we've got sentiment on our way, we know that the liquidity is in the wrong place. So it is at the moment bearish US dollar. But there is only so much they can do with grabbing stops before they have to let some of these guys win. And as soon as they let them win, they get out, they flip the other way, and that's when they start killing them again. So New Zealand dollar CAD, the other one, which is massively extended, 91% short. I've been long on this thing now for days. They're just not moving anything. The market is stagnant, as you like. CAD Swiss as well. 87% of people are long on CAD Swiss. Aren't they happy this morning? Yeah, happy days for the retail crowd. But lovely rejection this morning on the Euro Swiss. So I'm hoping this seems to run out of steam. You know, they're just going to do a profit take. But the thing that concerns me about this news is that, you know, it is just the Swiss National Bank making a loss. Businesses make losses, but when your main national bank is also your main GDP provider for the country and the currency, obviously this could be something quite hideous for the Swiss franc. I don't know. I've never experienced it before. Neither has anybody else, because it hasn't happened for 116 years. So who knows? So this is either going to be a lovely fade and a false move, or it's just going to fly. And if it flies, it flies. Now we can do about that, is it? Long on the DAX. So complete indecision candle this morning. I'm long. One. Oh, Jesus. Difference between E8 and my Forex funds, slippage-wise, unbelievable. E8 charge commission as well. My Forex funds don't. The advantage of E8 is you can pass in a day. My Forex funds takes you 5 days. Swings and roundabouts, isn't it? But slippage and execution on E8 is certainly a little bit worse than I find on my Forex funds, unfortunately. So scorecarding, obviously nothing's changed because we haven't had any real sentiment change, and obviously nothing's changed fundamentally this week yet. We will be today though, so we'll have a look at all those again in a bit. So I'm expecting potentially a little bit of a choppy one today, just purely because we've got CPI this afternoon, and obviously the inflation figures will affect the interest rates for the US dollar. The US dollar affects virtually every other currency in the world because it's the world's currency. So I would expect there to be a fair amount of chop this morning, while the markets wait for the CPI figures to come out, because they won't reposition any big US dollar transactions until they know what's going on with inflation and therefore potential 1/4 or 0.5% increase in February. So we might get a bit of a choppy one today. And again, these, whether or not you take these opening range breakout index trades on these news days, it's really a personal choice, isn't it? I'm just literally thoroughly forward testing it on all conditions at the moment, because obviously I've back tested it over many different periods of time, and it produces profit all the time. So obviously I've left it to run through news events and it's worked fine. It's just I want to visually see for myself. One thing backtesting doesn't tell you is when you're losing trades were. If I find 50% of the losing trades happen on news events, like when we're waiting for a news event today, I might make the conscious decision not to trade ORBs when we've got a news event in the afternoon scheduled. So I just want to let it go and see what it does, and if it loses, it loses. But it's one of those things you just have to test through time. As I said, I've always traded this strategy on stocks, and it doesn't matter with the stock market because you're always trading stocks after news events. There's very few news events scheduled after stock market open. So also, somebody said about that strategy to do with Al Brooks's 1.5 hour open limits, which somebody else has decided to take and change to 1 hour and called it a daily range and an inside daily range thing. I'm going to do some testing on that. I've watched the videos on that strategy, and it basically is just literally all it is propulsion gap or fair value gap, because they're trading the ICT version of a wide range bar. It's a wide range bar play within daily ranges caused within an hour on the stock exchanges. So I'm going to test that. I'm going to build an EA for that hopefully today and back test that strategy. And we'll see if that works. It looks good on paper. And basically what it is it's kind of trading the inverse of this. So as we push up, on the days that we get chopped around like this, what will happen is we will be taking shorts there and we'll be taking longs there. So all it is a mean reversion strategy, or it breaks out and you take the retest. So it's kind of a hybrid between the ORB and mean reversion, which you would use Bollinger Bands for. So you get the same effect if you used a Bollinger Band strategy with an ORB strategy. In effect, you get exactly the same result. And again, like I keep saying, everything you see, there is another way to do exactly the same thing. But it looks good. It's a little bit more complex if you're going to use ICT, because you've got to understand all that terminology, which is hugely. Oh, I remembered as well what that computer algorithm that he came up with was called. IPTA, wasn't it? IPTA, I think it was called IPTA or something. Made up some weird algorithm that runs the market that my mates in the banking sector have never heard of. But anyway, that he talks about that in those videos as well, the algorithm thing. And he does say in his videos as well, whoever that bloke is, if it exists, if it is a thing, because no one in the banking sector has ever heard of it. No, I know him anyway. Morning, Kenny. So opening range 2 is in. So this is trading at the moment the 5, the 10, and the 15. This one is trading the 5, the 10, and the 15 as well, I think. I can't remember what strategies I got running, to be honest. Swissy's holding at the moment. A little bit lackluster this morning, aren't we? So fairly small opening ranges this morning. 15-point opening range. And 22 on the 10-minute. And the 15-minute at the moment looks like it's going to be the same. So nice tight opening range. So if we do get a trend day today, nice opening ranges potentially to break out from, nice and tight. So we get good high lot sizing. See what happens. I'll let that run because it's not really going anywhere, is it? Oh, come on, Euro Swiss. Let's keep an inside bar and just pop down a little bit, can we? I'm really tempted to take a second on this, but I've got too much risk on it. If I'd have taken a 0.25% position, I'd probably add another one here and have this stop in the same place just to bring the average up and then get out of one down there. Morning, Stefan. Which valuation are you currently running? I'm running I'm running 2 with my Forex funds and 1 with EA at the moment. And I'm trading my funded accounts as well. I'm trying to position trade an account. And obviously position trading, I'm looking for somewhere between 5 to 10% a month. So I'm looking to pass this in a month. I'm obviously way behind at the moment because the market hasn't moved yet this week or this year. So I haven't actually had a chance to get anything on. Well, it hasn't moved, obviously, on anything that I've been on. Which is always the way, isn't it? Everything that moves is the stuff you've been sitting there not getting on. You get onto stuff and it goes sideways. That's the way it works. Morning, Pot Gaita. So let's have a look at the RSIs. So Aussie dollar Swiss is very extended on the 4 hour. Let's go through the 4 hours first. So the left-hand side here is the 4 hour RSI extensions. The right-hand side is the hourlies, which I've just realized I haven't set them all to 14s. I'm using 14 again now at the moment instead of 21 on the hourly, just to speed it up a little bit. Because now I'm using sentiment more, I'm a little bit less worried about being hugely extended on the hourlies on the RSI 21. So I'm using 14s across the board instead, just which I did start to do at the end of last year as well. Wouldn't it be funny if the CPI comes out flat? I don't think it's going to. It might do, but I'd be very surprised if it did. If the CPI, I think it doesn't matter. If the CPI comes out as a expected result, a minus 0.1, I think we're still going to get movement off of that because the market has factored in this huge movement. Obviously, what we had last week was nothing. There's nothing in here but positive news about the US dollar. We didn't manage to get any traction basically until the PMI figures come out, which is not, of all the indicators we had coming out last week, the PMI is the one that you would pay the least attention to for an inflation change, for an interest rate change. And the PMI figure was a massive miss, and that's the one that actually dropped it. So even if we come out flat on the figures today, I don't think the market will. I think the market will still move it. And the question is, have they already factored in negative inflation, which I think is what we're going to see? And if so, will that change their stance on the interest rates? Because there's really, really mixed views at the moment. Some of the Fed are coming out saying, yeah, definitely 0.25. Other members of the Fed are coming out and saying 0.25, but a 50% possibility of a 0.5. We've got central banks coming out saying they reckon it's going to be a 0.5, not a 0.25. So the market is completely confused at the moment. And the only thing that really drives that decision is inflation, mainly. So today, I think the banks will make a decision on the interest rates based on that figure. And if it comes out, whatever it comes out at, they will know it. Yeah, the market's confused. I'm confused. Everyone's confused at the moment. You don't get unemployment rates dropping and everything being happy and everything being, oh my God, this is looking amazing for the US dollar, and then it tanks. It just doesn't make sense unless they're factoring the move in that they're expecting this week, in which case we've done the move. So therefore, regardless of what the CPI figures come out as, we should do that. Unless it comes out, really, really, really different. If it comes out as expected or as a positive figure, I would expect US dollar to drive. If it comes out as a massive miss, a negative, i.e. inflation has dropped by 1% or something ridiculous, then this thing's going to collapse because they will guarantee a 0.25 increase. But not only that, is we will also be getting way on top of inflation, more than we were expecting to, which means that the next one, they might then go, actually, instead of the 5.25 to 5.5 we're expecting this year, we might actually drop our forecast to a 5%, in which case then we've only got one interest rate rise left for the rest of the year. And that will start to flatten out the US dollar. And what we're also going to find is, the thing you've got to think about with this, let's look at the fundamentals. The thing you've got to bear in mind is, think of interest rates like an oscillator when it loads. So at the moment, we're sitting on 4.5. They're saying that we're going to get to 5.25, possibly 5.5, but that's the max, right? So if we are going to push the US dollar, it's going to rise as we increase those interest rates. And as we flatten out those interest rates, the US dollar stays stable. What we've got now is a neutral currency with no further interest rate rises. But what we've also got is all of these guys still putting their interest rates up, which is making them more attractive. So you've got pressure coming down on the US dollar from these guys, which are getting stronger and stronger and stronger and stronger, especially the euro, which means that the euro becomes short-term more powerful, dropping everything. And as everybody sees the US dollar weakening on that inflation interest rate, everybody starts piling on the other currencies. So, the whole idea of this is to make yourself attractive to the world, i.e. if you've got $1 billion, stick it with us and we'll give you 4.5% return on it. Stick it with us, we'll give you 3.1. Stick it with us, we'll give you 2.5. In the basic terms, that's kind of what's happening. You want to be owning these at the moment. But as that becomes as attractive, that becomes as attractive, that becomes as attractive, more economic factors are taken into account, like how is your economy going? Should I invest in your businesses? Are your people happy? Are they spending money? Are you in a recession or not? So this becomes less important when everybody's got the same thing. They all cancel each other out. And we're getting to the point now, as an oscillator, where we're not going to go any higher here. We are here 100%. And we are here 100%. 4+, I reckon. We've got at least 3 potential half-point interest rate rises coming on the euro. That's going to become incredibly attractive. So it's really hard decision to make today. I don't think anybody really knows which way this is going. I'm going to get stopped out on this euro. Look, pumping again. So long 3 on the DAX. Not looking good really, because the euro is pushing, which means the DAX should be dropping. But let's see if this is the euro. It's not strong against the CAD, not strong against the pound particularly. Certainly not strong against the US dollar. So I would suggest that is the Swiss franc weakness again. So Swiss franc is moving up. Well, the Swiss franc is moving down, which obviously everything is moving up against the Swiss franc. Pound. Yeah, so this is Swiss franc again. So again, more weakness on the Swiss franc this morning. So this is not euro strength, which is okay. That means we've still got a chance of being bullish here. So this is where we closed yesterday. So initial target, obviously, for resistance is going to be yesterday's high, and yesterday's high is where we're going to find some limit orders. So if we can push up to there, got to be a little bit careful. What's up there? And looking on the DAX this morning. So yesterday, obviously, another bull day. This is an incredible run from the DAX at the moment, and the FTSE as well. The FTSE is doing the same. It's all, flying to the upside. Whereas obviously you're looking at the other indices, we're only on day 4 of the rally here. So the DAX is way ahead. We've just taken out that daily high. It's just not stopping. So this area here was the next resistance identified, and it just went net, flew through it yesterday. So today we need to see if we get some kind of pullback or bearish movement. But bear market's certainly looking a lot less bearish at the moment, isn't it, for the European zone? So everybody, our end in Europe and in the UK, this bear market is looking like it's over. Whereas in the US, we are still way embedded in that bear market. But confusing times everywhere at the minute. There's divergence across all markets, all currencies. Everything's in total confusion freefall mode at the minute. We've got an outside bar. Well, it's not really an outside bar, but it's a new low just been put in on the DAX. Right. So Aussie dollar Swiss. If anybody's got any pairs they want to look at, let me know. So Aussie dollar Swiss massively extended on the 4 hour. We're not extended on the hourly. We've just come down from there because we obviously stalled. It's one of the ones that has stalled this morning. So we are up at resistance at the minute, really extended on the 4 hour. So again, even looking at the previous extensions on this, very nice pullbacks, but that's not really a normal push, is it? That's off the back of the Swiss bank losing money. So theoretically, you should get a nice pullback into this propulsion area, and especially as we're at a double top. So that's a pretty good looking short at the moment. We've just had the reversal alert on M5 this morning. M15, you just got it, and we're retesting at the moment. But obviously, we need to see what's going to go on with this Swiss franc. I'm going to get stopped out of that Swissy. 90% sure. Just putting a new high of the day. Euro Swiss. So hope for a double top. So that's Aussie Swiss, very extended. Again, all these Swiss francs, just be very careful. Any mean reversions you try to take off of these Swiss franc trades, bear in mind what the reason these are extended is because of news that the Swiss National Bank lost a load of money. So virtually the only ones we've got to look at are Euro, US dollar, Euro CAD, and the others. So it doesn't matter technically, all of these you're probably going to find might be in fairly decent areas like Aussie Swiss. Yes, it is hitting a nice area, which is potentially going to act as resistance. But you've got to ask yourself the question if this is a fundamental issue for the Swiss franc. It's not going to matter. Technicals are going to mean absolutely nothing, are they? At technical levels, we have pending orders, limit orders placed. Limit orders trigger, but that does not mean that the buyers are going to stop buying. Can I ask your thoughts on the Dow? Dow. Well, the Dow's going to move on the news. Yeah, I mean, Dow is a nice reversal, ready for a pullback. So we're coming up into this area here, which is potentially going to find some sellers. But I mean, today, you know, it's out of your hands today. This thing is going to move the opposite way of the US dollar on the CPI figures. So I can't tell you where this is going to go today because it's all related to where the US dollar is going to go. If the US dollar is going to pump, this is going to drop. If it's going to tank, this is going to pop. So you basically want the same as me. You want a strong US dollar this afternoon if you're short on it. But yeah, I mean, it's extended on the 4 hour. So, you know, worst case scenario, you should get some kind of pullback off of it. But, you know, the thing that's, the stock markets usually work in sync. And the fact that Europe this year so far is so out of sync with the US, you know, think about divergence. You've got companies in sectors in this stock index and the FTSE 100. So we've got 140 stocks there across multiple sectors, across biotech, across electronics, across, you know, motor, everything. Sector purchasing affects these from the US indices. But the fact that the US indices are struggling at the moment and kind of doing that, yes, moving a little bit higher, but not very much. And these things are absolutely flying is weird. You don't normally see it. You normally see all the stock markets moving in tandem, although they move completely differently, obviously. But they, you know, we're in a bull market or a bear market from a business perspective, aren't we? Not from this particular set of indices. So it's very difficult to tell. There's a lot of people calling this bear market over. You know, with and quite rightly so from a technical perspective. Look at the Nasdaq. But everyone was expecting it to go further. It could be this is where we start to rally from, and we go back to the happy days where we just buy every dip and just make money constantly. The sooner that happens, the better, because I want to get my pension funds back up and running. But I'm not doing it in this market. It's just too volatile, too dangerous. But I'm waiting. I want to see. I basically trade the S&P with my kind of 401k, if you like, or the pension investment account, basically I call it. I want to see, you know, proper signs of recovery on this. Yeah, we've had the odd pop above, yeah, which you're going to get. You get the odd pop above, yeah. So we might get a pop above this high, but that doesn't mean the bear market's over. And it's really dependent on recession, isn't it? So today looks like a typical gap fill on the DAX. Open, run up, fill the gap, now coming down. I haven't got a broker open with the gap. But yeah, I mean, if this reverses down, then fine. The way I mean, I don't know what the Euro Swiss, what's the Euro up to now? Yeah, just about to stop out on that. Oh no, it's double topping. Might survive it. We'll see. I don't see much strength in the euro, though. I mean, the euro is coming down across the board. So I would suggest that that is bullish for the Dow, the DAX. But we'll see. Do you think only trading with the trend per the daily and 4-hour chart colors, getting on RSI extensions and good structure levels is an ideal strategy? Yeah, definitely. That's all I do most of the time, isn't it? So my life revolves around RSI extensions to the downside when we're in an uptrend. I'm basically entering on pullbacks. So obviously that's, but yeah, that's the typical trade. So wary about these because we're in an uptrend. So you look at the, it's not really a good example, is it? It's a better example if I come out. Look, so when you're in a downtrend on the 4-hour, obviously you're in a downtrend on the daily here and on the 4-hour. So look at the RSI extensions to the downside here and look at what you got out of them. So that one was fairly big. That one there was that. That one there was that. That one there was that. That one there was fairly big. That one there was that. That one there was that. But look at what you got on the extensions to the upside. Loads, obviously, because you're in a downtrend. Yeah. So if you're in a downtrend, taking the RSI extensions to the upside, so that one there you accumulated and then came down. That one there you came down. That one there you came down. When you're taking the RSI extensions to the upside in a downtrend, first of all, they work faster because you're going with the momentum, and the momentum is going to be more. So if you've got 70% of people shorting this thing for a year and you've got 30% of the people longing it, obviously your trades are going to work out faster. Of course they are. So yeah, that is the textbook strategy. The problem is with position trading. When you take that one and you scale in again on that one and the trend changed direction, that's it, you're wrong. So, and this is where fundamentals come in. So the euro US dollar, looking at the euro US dollar bias and what should be happening with the euro US dollar, if there isn't a strong bias as a buy or a sell on the euro US dollar, i.e. it's range bound, I won't filter it. You can in effect take any RSI extension, but ideally, if we are currently in an uptrend and it's range bound, I'd probably want to stick with the uptrend one. So euro US dollar, looking at it right now, you could take an RSI extension to the upside, which I'm actually on at the moment, but it's more risky, isn't it? That's a much safer one to take. But how many opportunities have you had? 2. So you're going to get less opportunities, but those opportunities are much more likely to work out if you stay in line with this. So looking at all these euros, buys only, euro Swiss, euro pound, and euro yen. Completely sideways, isn't it? But if you'd have taken that one, fine. You only had one in the last whatever. Euro pound. So you'd have been against the trend in a range, but I mean, this isn't trending, is it? But it's not trending because it's just, this is a euro pound. It's a close trade partner, so you don't get much movement on it. But you just want to be taking the longs rather than the shorts to keep yourself on the right side of what the rest of the world is doing or anticipating to happen. Euro yen, as a buy, you want to be taking buys on it rather than sells. But again, this is a difficult one because of intervention. These are really bad examples I'm picking, aren't they? Because these the euro pound always goes sideways. The euro yen, we've got intervention happening at the moment. Again, you got to know about all this stuff that's going on with the economies, haven't you? Because otherwise you're stuffed anyway. But yeah, the pound New Zealand, pound US. So to answer the question, if you drop down onto lower time frames, just take the RSI extensions in line with the bias. So the pound New Zealand is a short at the moment. So if you'd have only taken the RSI extensions on the hourly, here, 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 and here, because the bias was down, and on the 4 hour, we are bearish, then you'd have been absolutely fine. And that's what I'm doing. That's why I'm short on this at the moment. Yeah, so you'd have got that, you'd have got that, you'd have got that. Obviously, I have no idea how much of it you'd have got some of it. But yeah, so obviously these moving averages are the daily moving averages, just obviously displayed on the 4 hour chart. So you only need to use one. This is why I only ever look, I very rarely look at the daily, I only ever look at the 4 hour chart, because these are the daily moving averages displayed on the 4 hour roughly. So I know we should be selling. So I'm looking for opportunities to sell. There's no 4 hours because it's at the moment range bound, but the bias is short. So just looking for shorts in line with the trend. So I can't find anything there. If I want to trade the hourly charts, then I'm going to take that, which I did. Unfortunately, it just hasn't gone anywhere yet. Yeah, that's exactly what to do. I think gold is on the way to all-time highs. Is at the moment. If this US dollar keeps collapsing, we'll see. That's stuck. I was a bit worried about this today because there's going to be a lot of reluctance to enter any speculative positions today. Ahead of that news. The only thing that is still moving is that Swiss franc. Worrying, isn't it? What's going on with the Swissy? Swissy might go onto my don't trade list for the moment until we can unpick what impact this is going to have. There's an unusual. I mean, it's not unusual. Lack of news. The Swiss are notoriously tight-lipped. They didn't tell us about the interest rate rights, did they? They just did it and went. They didn't tell us about unpegging, did they? They just went, and it was the biggest market collapse of all time. You know, the Swiss don't tell you about anything. They kept that quiet, didn't they? They knew they were going to lose a lot of money, and they kept it quiet. So there's no news coming out about it. No one's talking about it either. Traders bet the Bank of England interest rates will peak at below 4.5%. Interesting. Who said that? Traders. Right. I love the way they put this red. How many traders are there in the world? Who specifically said? Me? You can listen to me? 4.5. So we're 3.5. So there's another 1%. Again, bullish pound. So the traders reckon we've got another 1%. That's a lot. Might get 2100 on the. We'll go through the pairs in a minute. Sorry, I keep flicking around. We keep going off into tangents, but it's not in any rush. Nothing's going anywhere. Yeah, gold. I don't know. As I say, I don't trade gold. Apart from that trade I took yesterday, which was funny. That little one, just to prove a point. But yeah, I don't know where this is going. This is dependent a lot on the US dollar, obviously, and we've got a fairly weak US dollar. So, but gold is doing well on its own without the US dollar. It's moving on its own without the US, which it does, but it's erratic and sporadic, and you can't time it. So that's why I don't like it, because it's a bit. There's no fundamentals to support it, which is difficult to trade. So who knows? What is the all-time high on this? Is this the all-time high we got to before, 2068? Yeah. Good Duke, isn't it? It's halfway there. But, you know, the old fib traders are going to be going, it's halfway there. They're all going to be looking at shorts. The problem we've got at the moment is demand for gold as well is down because of China's lockdown. And China do a lot of manufacturing of electronics, and that is primarily where gold is used in electronics. So anyway, let's just see what's going on with that. Back off, up again. So the open today so far is a low, high, higher low. So that's where I'd look initially. I might manually close some of these out today if we do get up there, because I don't think this is going to have the legs today. Great example earlier was analyzing Swiss yen. The fundamentals said buy, but I took the daily and 4 hour to see a downtrend. Swiss yen. So yeah, so the Swiss yen is a buy. Fundamentally, there's not a lot of cop positioning to help you. It's mixed. So they're all short on the yen and kind of neutral on the Swiss. Sentiment is short Swiss yen at the moment. That's going to change, obviously, because the Swiss is going mental. So that is a buy, the Swiss yen. So if you look at it and you see a downtrend at the moment, that's right. But why is this in a downtrend? Why is this red at the moment? It's that intervention. So, you know, the yen is a very difficult one to trade at the moment because the Japanese are just getting involved now. So you're pushed around a lot by the Swiss franc with this one, but it's a downtrend. So take any RSI extensions to the upside on it. Personally, I would, but equally, it's also a weak buy. So you could take the ones to the downside. I mean, the vast majority of the time, yeah, you've seen me, I don't know, you've been in here a while, but I've been trading this way with position trading for years. And 90% of the time, it doesn't matter whether the thing's going up, down, or sideways, or whether there's news or fundamentals pointing in that direction or that direction. The RSI measures the relative strength of the move that you've just seen. And the theory and concept behind the strategy is when the banks have made a fast move in one direction, i.e. the RSI gets extended, they need to take profit on the move. We are using that theory and concept that happens over and over again in the market to make our entries. So we're doing, every time you get into a trade on RSI, you are taking the opposite bias to the banks. The banks have done that. They are short. What you are doing is getting in and waiting for them to unravel their shorts. Profit take. Yeah, they can't do that without doing that, because if they don't do that, they don't make money. So we're using their money-making move to get in. So virtually all the time, if you got in on that RSI extension there, you didn't get any money. You had to wait for them to do their second move. You got in on this one, and then you made your money. Yeah. So virtually all the time, regardless of whether you get in at the top or the bottom on the RSI, whatever way it's moving, you're going to get an opportunity to profit. Yeah, that one there, very small. If you didn't manage to get out on that, you definitely got in on that one, and you got out on both of them. Yeah, that's what happens most of the time. When we get into trouble is when we get squeezed, when we catch the wrong side of a move. And that is what I got caught in with the Aussie New Zealand. I got caught the wrong side I was buying this trend for ages and I got in there long. I couldn't get out. I had to take a loss. If I'd have been watching the fundamentals, I'd have gone, oh my God, I want to be selling the Aussie New Zealand, not buying it. And this at the time was a -8. So, you know, that's why you need to pay attention to the fundamentals and not necessarily stop trading in both directions. That's not really the issue. But if this suddenly flips because of an interest rate change, a COT positioning change, or sentiment changes really badly in one direction, you just have to go, right, okay, do I really want to still be in this? Should I get out of it now rather than waiting for 3 weeks for a 10% loss or 15% loss or whatever? Maybe I should just take a 2% loss now. I've made 12% this month. That's kind of the way I'm using this. But ideally, I just want to try and get in if I can. It's an alarm bell for me, right? If this is a buy, I don't want to take shorts. So if RSI gets extended to the upside, I'll give it a pass. If RSI gets extended to the downside, yes. If this is range bound, I don't really care. I'll take all RSI extensions on it, but I'd be much more inclined to think on the CAD Swiss, for example, I really want to pay a little bit more attention to the shorts because we have got a short bias on it. It's just not very strong. It's not strong enough to say this is definitely a short. A 0 is 100% neutral. A -1 is still a little bit on the edge of that side, and that -1 could turn into a -3 quite quickly if all of a sudden COT jump on board or retail decide to get the other side of it. Then all of a sudden we're like, oh, we don't want to be long, do we? So, you know, pay attention to the numbers as well. It's a range bound one, but it's a -3. To flick that over into a -4 and turn it into a sell only takes COT positioning to change or retail sentiment to go 0. Now we're all of a sudden in a sell. So you just got to use your head really. You know, and this is what I'm doing when I'm looking at the RSI extensions, Aussie dollar Swiss, massively extended to the upside at a level of resistance. Looks like a fantastic short. Any reason I shouldn't? No, take it. If that was a +5, I wouldn't want to bother. But it's not a +5, so take a short. Worst case scenario, it's range bound. And if we don't use this as our range anymore, and we make a new range using that high, fine. Enter, 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 out. Because if that happens, you're going to be massively extended on the RSI. So it's going to come down again, isn't it? They're going to need to take profit on that move. If they don't take the profit here, by the time they get to there, they're going to be so exhausted, they want to make some money. That's when they'll get out. We will get out with them. But for me, it's becoming more important to time my entries because I'm trying to get a proper count through using position trading. To do that, I've got to be a bit more careful, haven't I? I've got 5% drawdown. When have you ever seen me not sitting in 5% of drawdown? I live in 5% of drawdown. That's my risk. So it's difficult. Off to the races at the moment. So we just challenged the close. Actually, the close is probably not there. It's anyway, but trailing. So just reducing the risk a little. We might find a little bit of a pullback from here. This could be it. I'm not anticipating a lot of movement today, but am I right in thinking that the 90-minute strategy is only for indices? Right, well, that strategy, let me just answer A's question. What are those trend moving averages? So these are the daily 72 and 24 EMAs. So this represents the quarterly reporting periods, and this represents the monthly reporting periods of the institutions. So institutions report to investors and shareholders on a quarterly and monthly basis. So they will target levels and moves on monthly and quarterly bases. So this tells you what their current movements are. That's the idea behind them. It's all explained in the Bootcamp. If you go onto the YouTube channel and go into Position Trading Bootcamp. Watch those. It will explain what all the indicators are and what they do. How do you know when to barcode orders or just take one position? I have no idea what that means. Never heard that terminology. There's a very close stop loss. Very, very close stop loss. I don't know what you're talking about, Alan. Sorry. Yeah, so Tony, am I right in taking the 90-minute strategy? So the 90-minute strategy by Al Brooks. Al Brooks it's not a strategy as such, but yes, it does only apply to indices. So Al Brooks is it's not so much a theory, it's a fact. But Al Brooks is fact, if you like, is that within 90 minutes, there we go, I've got that one down there. Let me just put this one as 10 to 11 so we can see the other one as well. So Al Brooks basically has identified many, many, many years ago on all stock indices, and he only trades stock indices. So to answer the question about Forex, this is not designed for Forex, but apparently it will work on Forex, is that after 1.5 hours, you will have either the high or the day established with a roundabout, I think it was an 87%, I haven't got the book with me, but I think it was an 87% probability or something. It's very, very high. So if we let this one play out, yeah. So that opening range high 2 there is the 1.5 hour high and low max. So after that time period, which is $18 candles, which is there, this candle here, let me mark it. Okay, so that is the open. That is the 18th candle, which is 1.5 hours. By the time you get to this point, there is pretty much a 90, it's almost a certainty that you have seen by here the high or the low of the day. That in itself gives you absolutely no edge whatsoever, right? Because you now have a 50-50 shot. You had a 50-50 shot when the thing opened. Right now, I am playing a 50-50 shot. When this thing put that 5-minute opening range in, I had a 50-50 shot of going long or short. I have no clue. No one does where it's going. So let's pick where the market's going. Market's going long, I'm with it. That's it. That's this very simple strategy. I haven't got one. I'm going to go where the market goes. It's a momentum breakout strategy. His observation is that after 18 candles, you have seen one or the other, right? So in this particular case, by the time you got there, you'd seen the low of the day. At this point in time, you had no idea you'd seen the low of the day because this hadn't happened. So when you look at this in hindsight, and you're going through the strategy test, you're going, this is amazing. Gives you no edge whatsoever though, does it? Because right here at the hard right edge, do you go long or short here? So the hourly, someone else has used the hourly. And to be honest, right here, they're the same thing, aren't they? Yeah. But it's designed for stock indices. The edge you can use here is if we break that level, you know that that's the low of the day. If we break that level, you know pretty much with a 90% certainty that's the high of the day. But what it doesn't mean is that it's going to do that or that. What it means is you've seen the high or the low of the day. What it can do now is that. Or it could do that. Or it could do that. Or it could do that. We don't know, do we? What's going to happen? It could break out. So that's the theory, and it's totally right. If you go back test this, and I'll do it now. Go through some more days. This is just the it doesn't matter what index you look at. I'm looking at the there's two sessions. Obviously, you got the Frankfurt session and the New York session. You're looking at 1.5 hours into the session, so it doesn't matter which one you use. But yeah, if we go along and look at this one, there you go. So right here, right now, that is the high or the low of the day. So that is either going to be the high of the day, or that is going to be the low of the day, or that could be the high and the low of the day. Not a clue. Let's run it and see. Okay, this is one of those 10% where we get a breakout the high, a breakout the low. But what is your opportunity here? Yeah. Short the high of the day, or long the low of the day, or break out the short of the day, or break out the long of the day. Yeah. If you break out the long of the day and it fails, short it. Yeah. If you mean revert the low of the day and you get stopped out, flip and reverse and short it. So it gives you an edge in the fact that you know that these levels most of the time will form one or the other. So you just need to decide. It doesn't help you in the fact that it gives you this is 100% guaranteed to do this next. But what it does is you know that with all likelihood, 90% one of those is going to be in. And most of the time you'll find that that is the case. Yeah. So again, here, short, long. In a range, in a rotation day, that's your play. If it's not a rotation day, you can do that. Other people have said about using filters on it, and someone's just said that actually, haven't they, Jane? What if you use another filter? You can use a moving average. But what's a moving average got to do with intraday movement? Nothing. There you go. So there was your high of the day in. Yeah. So that was your high of the day. To a pip. But that's your high of the day. Yeah. Down. So, but it's established within that first 18 candles. That's the theory. But Al Brooks is an hour and a half. There you go. So that day didn't work. Don't forget, this is and I think the guy that does these other videos is talking about an 88% edge. But your play is to long the low of the day, short the high of the day, there or thereabouts. But I mean, it didn't work on this day either, did it? I might actually be doing this wrong because what I'm doing is I'm looking at the NASDAQ and I'm using the UK Open. So let's switch back to Germany. It's less effective the other way around, obviously, because I should be using the New York Open. So let's switch over to the DAX because this is the right one then. There you go. You'll find this will work better. Yeah, so on these days you've got low of the day is in, never came back. It will come back and it will be it'll trade around the low of the day, and it does that regularly. But high of the day is in there, never went back there. Low of the day is in there, never went back there. Low of the day and high of the day is in, high of the day, never went back there. We've got the low of the day in here, and the high. See which one of these works. One of them will. Both of them. So in this case, as I said, sometimes you've got the high and the low of the day in already. So you would mean revert from the edges. So again, the only edge it gives you really is you have levels now to take trades from, don't you? If you're a mean reversion trader, you're going to short the highs and long the lows. If you're a breakout trader, you're going to break out of them, like me. But you do both. DAX is broken out of yesterday's high. Stops trailing. So yeah, that's the strategy. That's the theory anyway. But Al Brooks is as I say, Al Brooks uses 1.5 hours, and the new concept, if you like, uses 1 hour. But you can see here what I've got set is the blue line, OR3 is the 1 hour, OR2 is the 1.5 hour. So most of the time you will find that they're the same thing. Yeah. which is why, you know, I keep saying this over and over again in here. Everything you see when someone comes out with a new course, it's the same thing as something else repackaged and with a slightly different name, slightly different indicator to do the same thing. But most of the time you'll find it's exactly the same thing. This is Al Brooks's version. And every now and again, this blue line is the new guy's version. Every now and again, it's slightly different. 99% of the time, it's Al Brooks's strategy. So go and read his books. He's the godfather of it. But what people are doing now is they're combining this with ICT, so-called smart money concepts, and basically just using the other indicator created by somebody else that was not stolen, changed the name of, called the wide range bar, and now they're using fair value gap strategy with it. It's all the same stuff. Been using it for years. So the idea being is, I need the WRB indicator on here to demonstrate it. But what you will do is you will, when you have your ranges in, you will look for wide range bar tests to get in long, and you will look for wide range bar tests to get in short. So basically, when you get this range established, from this moment on, you start looking for wide range bars to take entries. Ideally, towards the extremes, because if this is the high of the day, we're not going to break it. If this is the low of the day, we're not going to break it. If we are going to break it, you're going to get stopped out. And if we break it, you flip short. You take the range break. So, you know, you lose a trade to flip short and win a trade. If you've got a risk of $500 on that position that you take there and it doesn't work out and you stop out on it, you flip short and you make $1,000 going the other way. It's a very, very, very simple strategy, but it's been around for a long time and it's a very, very similar combination thing to this. It's an opening range break, but it's using the 1 hour session. And you can do this with the EA. You know, the opening range breakout EA will do this already. But it won't mean revert. It'll only do the breakout part. You need to do the mean revert, and you need to decide, don't you? You know, there's mean reversion, there's breakout, and there's trend. Those are the three strategies that exist in the world. One of those three things happens at every level. It either mean reverts, it breaks out, or it breaks out and it goes into a trend. Pick one. Or two, or three, up to you, you know. But hopefully that explains it. You know, it's the same thing. Go and read Al Brooks. If you haven't read Al Brooks, it's one of those books, Trading in the Zone by Mark Douglas. Every trader in the world needs to read that. All of Al Brooks's books, every trader needs to read those. And everything by Larry Williams, especially short-term secrets to long-term gains. That book is the one. This is on my desktop all the time. I read this all the time. And it basically explains that the idea behind this book is that he's got the secret to trading this way. And the secret, I'll cut the book short for you, right? Basically, the long-term secret to short-term trading is don't do short-term trading. Do that, and you win. That's basically his premise, and it's 100% true. If you look at all of his strategies, they all work today as much as they did 20 years ago. Same strategies work today because that's the way the market moves, and he knows how the market moves, but he doesn't trade the stupid time frames like M5, like we all do, which is why I concentrate on H4. It's as long as I want to go. So back down to 1% now. Still in Euro Swiss, look. Hasn't gone, has it? Oops, come off those highs. So we are holding this 300% ADR level. At the moment, it'd be lovely to get a reversal alert on this ahead of the news. As you try to pass the prop by position trading, are you raising the risk any? I too would like to try that, but risking 1/4%, I feel like it would take a lot of trades and time. Yeah, so basically what I'm doing is kind of a hybrid strategy. So I'm using a stop loss. So if you look at all of my trades that I've got on pound US dollar, so I don't use a stop loss, obviously, position trading. All of my trades have a stop. All of my positions, because the idea is obviously with position trading, if we get a move like that, yeah, we get in, we get in, we get in, we get out, and we make a profit on the position, which is why it's called position trading. I'm taking a position, but it's split into multiple trades, and that's your exit. If we get a squeeze on in a position, yeah, and I sit through these regularly and get out fine. But in a prop firm, you've got 5.5. I've got 5k max drawdown on a 100k account. So what I've got to do is, if I'm going to add another position and add another position, by the time I get here and I've got to add another one, I've got to take this off. So what I'm doing is I'm using a 0.5 to 1% risk per position, 0.5% really. And I'm hoping that I can pass within the 42 days. But I have no control over that, do I? Because the market controls whether or not I make money, because it is in control of when it does its profit take moves, not me. So it's like anything. When you're doing an evaluation, you will pass or fail depending on whether you get a winning or a losing streak when you do your evaluation. But I'm a week in now, and we haven't had any movement, obviously. So everything that I've got into has kind of gone sideways on me, and I haven't managed to get any positions. So I've gone a little bit more aggressive on my Euro US dollar. So I've gone in with 1% risk on Euro US dollar, and that's what I say today. If US dollar tanks today, I'm out. But that's because I got in aggressive. But that's my choice. It's very, very, very difficult to position trade on prop. Very difficult. Can be done, and I did it last year. As I say, I got within $1,000 of passing last year, and I was getting a bit close to the time limit, so I upped the risk, and I just got into something that squeezed for a couple of weeks, and that was it. But again, if I hadn't got into that position, I'd have got into a different one. I'd have passed it. It's literally down to the market. You don't have a choice. This thing goes where this thing wants to go, as we know. Positive news, let's go the other way. So you don't have a choice on whether or not you pass. The market will pass you depending on what happens, and you've just got to try and keep within that 5%. I've got 12% drawdown in total. That's not a problem. I can draw down by 12k. I just can't have 5k open on a day. That's the problem. I've got no problem position trading within a 12% risk. If you've been in here for a while, you see most of the time I'm sitting in here somewhere between 3 to 10k is my normal drawdown. That's my risk. My normal risk is 3 to 10% of my account to make my 10-15% a month, whatever it's going to be. But what I can't do is guarantee that I can keep it in 5, and that's what I'm attempting. But that's why the hybrid is there. I want to get out of these if I'm wrong, and hopefully not hit that max. But it's like the prop firms know how to set the rules, so we're guaranteed to fail at some point. Yeah, well, they do. That's what they do. I've said it in here many times, haven't I? You take a strategy with a 50% strike rate, yeah, and you take 100 trades, 50 of those are going to lose. There's no rule that says it's going to go win, loss, win, loss, win, loss, win, loss. Yeah, it could quite easily go loss, 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 win, 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 loss. Yeah, blown your evaluation. If you'd have started your evaluation there, you passed it in 2 days, but you didn't. You started it there, so you failed it. Your strike rate hasn't changed, but the date you start your evaluation is the thing that makes you money or not, because you've no idea what your win-loss ratio is going to be and what order it's going to appear in. They know that. They know that there isn't a trader in the world that isn't going to have a losing month. When you have a losing month, you blow your account. How do you know that? Look at me. I had 2 losing months last year. I can't help it. There's nothing I can do about it. They're not silly. They're not silly. I haven't done any analysis, have I? We're waffling. DAX struggling a little bit up at the highs now. So we've got that propulsion move. So there's your propulsion break. So hopefully we'll have that hold. It's holding at the moment. We've tested it a couple of times and we've added. So, but there's not a lot in the market today, is there? Ain't got any legs. It's all waiting for CPIs. Jane, what if you use another? Oh yeah, filter. Yeah, so you can filter that. I'm gonna test that strategy. I'm gonna build an EA to test that strategy. I don't really know how to trade it. That's the thing. I've got a couple of ideas how to trade it. So I'm going to see if I can build an EA around it, but it's exactly the same premise as the opening range breakout. It's just the opening range breakout in reverse, really, isn't it? And I haven't actually tested. I've never tested an opening range breakout on an hour. Should we do it? Let's have a look. Let's do it. So let's try 11, and let's try 11:30. And let's trade 1 and 2, and let's take retests on 1 and 2 as well. So this is going to trade the breakouts on them. As we're so high and the breakout is either going to pass or fail fast, I probably wouldn't use more than, let's use a 30% of the opening range as a risk. And let's try a 1.5 and a 3-to-1 reward, just as a little tester. We'll do any add-ins. We'll break even as well. What are we trading? The DAX 20s are enough. And shall we trail? Let's not trail. Let's just go and take the breakout. We'll break even after 20. Let's give that a go. See what happens. This will be a fun experiment. So we're only trading breakouts on the hourly and 1.5 hour. Okay, so there's breakout long. So we've got a stop, which is 30% of the opening range, which is 40 pips on a 132-point range. Can't remember which of these worked and which of these didn't. There's highs and lows. So yeah, that one didn't work. So on this day, your strategy was mean reversion. Mean reversion traders made a lovely profit today, didn't they? So the lower the day was in, and also the higher the day was in, virtually. So trend breakout strategies obviously failed that day. Oh, what have I done? Expert advisor self-terminated. Why? Oh, thanks for the error codes, MT4. How do you self-terminate that? There. He tried to go long with a stop. I don't know what that was. Weird. Let's try a different date. Just see what's going on in the DAX. So pushing again. Again, mean reversion didn't work there. So we've got two slightly different areas there. So this is Larry Williams level. and this is the 1 hour level. So ever such slight variation on the low, but the high is the same. Again, another day inside the opening range. So he's right. The high and the low of the day is in by an hour and a half. But normally it's one or the other, but this time it's both. So again, your trade here was the mean reversion trade. Again, I think this is much better as a mean reversion strategy on the low of the day or the high of the day being in. The breakout will happen. So you should really be running both strategies. You should be running a breakout on it and a mean reversion on it. So it's not as good for breakout trades, is it? Why did you terminate there? I've got a setting wrong somewhere, haven't I? What have I got wrong in here? Oh, I've got range 3 starting side of range 2. That'll be it. But anyway, yeah, so you can see, I think personally with these types of strategies, it's a mean reversion strategy. And the way that the new guy explains it as well, which is slightly different, is when you've got your hour and a half in, let me just draw one, your hour in, or whatever you want to use, I don't think it really matters, to be honest. I've just proven that, haven't I? They're very rarely not the same level. When you've got these levels in, what he does with it is he draws, obviously I drew, same as I do, the opening range is the wicks. But what he does is he then takes the high of the body, which is there. This is not a very good one. Let me find a better one. Right, so this is a better one. So what you would do is you would then take the high of the body, the highest body within the high, and the lowest body within the low. And this is what he calls, so this is called the daily range, and he calls this the inside daily range. Yeah. So whenever you come back to the inside daily range, you go long in this zone, stop outside. Whenever you come up into this area, you can go short, stop outside. And the idea being is, if this is the high of the day, we shouldn't go above here. So if we're getting close to it, it's a mean reversion opportunity. Same here. This is the low of the day. There, and there's the body. If we're getting close to it, and in this case, it worked absolutely perfectly, didn't it? You go long. So it's a really good little strategy. But again, it is just Larry Williams's strategy. And again, there you had an opportunity to go long at the low of the day on a bullish engulfing. You need a signal or some reason to get in, obviously. This is just a condition. It's not a signal. That day it didn't work. It was a breakout. It was a chop, wasn't it? But anyway, it's something to have a look at, and I will have a look at it and build something to test it. For some reason, my EA is not liking those settings, and I don't know why. 10, 11, 10, 10, 11, 30, 10, 11, 30. I don't know. I didn't like that for some reason. Found a bug. With position trading, what size of account would you need to make 10% plus a month? Any size, Cam. Think about what you just said. Have you watched the Boocamp? If so, you should know the answer to that. 10% of your account is 10% of your account. If you've got 100,000 account to make 10% of your account, you need to make 10%. If you've got £100 account to make 10% of your account, you need 10%. 10% is 10%. So the question to your answer is, the size of the account is irrelevant, obviously, because if you're making 10% of your account, you're making 10% of your account. If you've got a 100K account, you're making 10 grand. If you've got $1,000 account, you're making £100, aren't you? But it's irrelevant. Your risk, if you look at the market reverse alerts EA, which is what obviously I use to trade, position trade, your risk is calculated automatically for you based on a percentage of your account. So when I get into trades, I tell it to take a percentage of my balance as a risk, and I then tell it to use a stop of a distance, and it calculates the lot size so that I will only ever lose 0.5% of my account. The account size is irrelevant. It will lose 0.5% of my account. So what you make is relative to the lot size you take. So the more risk you use, the more you'll make, but the more you will also lose, obviously. So how much profit I've got on that? I've got $1,300 profit running in that DAX trade. I might close this out here on this account. This one's already closed out. Let's say we hit a trailer on that one. I might close this one out just because I want to trade the NASDAQ this afternoon and I'd like a buffer. So normally I would let the EA run, but I'd like to bank that 1,300 because I'm also now trading NASDAQ 2 in the afternoon on the same account. And I don't want to, I want to give myself a buffer, really, in case this afternoon goes. I'm happy with $1,300. What makes you decide to go aggressive when, and what makes you decide to play it safe with the order? So going aggressive, so aggressive, right? So there's two different things you're talking about here. There's aggressive drawdown control. Euro's pushing again. Euro Swiss isn't. That's lovely. Whoops. So we've got the reverse alert on Euro Swiss. Second entry short. I'm really leveraged on this Euro Swiss now. I've got to be a bit careful here. I've got 1.7% risk on this now. I'm going to reduce. So what I'm going to do, I'm going to reduce that second position down to 0.5%. Actually, I'm going to reduce some dough. This doesn't make any difference there. Got to be careful with this position because it's really aggressive. Aggressive. So there's aggressive drawdown control. So when I'm position trading, aggressive drawdown control is when I get into a level where I'm uncomfortable. So typically aggressive drawdown control is triggered when I have somewhere around about 5 or more positions. I then start to think, right, I'm wrong. At the moment, I'm wrong. I've timed this wrong, and I need to start getting rid of some of this. So what I start to do then is look for levels to take aggressive drawdown control from. So for example here, pushed up, pulled back, pushed up, double topped, pulled down. I'd get into an aggressive position there because we've got a double top at a level of resistance potentially. And what that aggressive drawdown control position does is it gives me a higher lot size, which allows me to make a quick profit, which I can then take and then reduce some of the positions down here. Getting in aggressive in this case is purely just a pass prop. And the better I think a trade idea is, the more aggressive I will go. So if I'm taking a normal 4-hour extension, so look at the pound New Zealand, for example. That was a 1-hour extension taken back here. So if I'm just taking a normal entry, I will just get in with a normal size. So this is risking 0.5% on 2 ADR. So it's just a normal position. I'm getting in. If I'm wrong, I'll scale in. If I'm right, I'll get out. But obviously, I haven't gone anywhere on this one particularly. But that's a normal size position. When I see something like the Euro Swiss yesterday, or the Euro US dollar. So the reason I'm aggressive on the Euro US dollar is because I believe this move is false. because we had a negative move on the US dollar on nothing but positive news. So I think they are running liquidity ahead of pulling that back down again. So what they did with that news event was they took out everybody that has entered a short position on euro US dollar since Christmas. They liquidated the lot. And since then, they've gone nowhere. They've done nothing with it. And this move was counter to the news, apart from the PMI figures. So that's why I'm aggressive on this, because I believe that we're going to come back and retest this propulsion gap. So I'm aggressive because I think it's a much better trade idea than the pound New Zealand. The euro Swiss, I got aggressive on because I think that Swiss franc move needs a breather. Yeah. When you get a 250% ADR move in one day, the market is exhausted and there are people sitting in an awful lot of profit. As soon as they start to see their profit reducing because sellers enter the market or some of the buyers in this move start to take their positions off and bank it, they will see their P&L drop. As they see their P&L drop, it encourages people to hit the other button and take their positions off and make their money, which then makes the move accelerate a little bit more. As that move starts to move down when people are taking profit, the sellers see a short move starting. So they jump on board for the fade, and then it starts to move a bit quicker. So and again, this is all covered in the Bootcamp. It's called elastic band theory. The more extended the market gets, it doesn't get to the 90% on the RSI is rare. You won't see that very often at all. Yeah, we had one there. Yeah. What tends to happen on these is you get that fast snapback. That's what I'm playing, the snapback. So if it's unlikely it's going to push much further. Therefore, I might as well get in big because my odds are so much more in my favor. Look at the ADR indicator. It shows you in FX what the odds are of levels being exceeded. So your average daily range will be exceeded 42% of the time. Quite common. 125 will only be exceeded around about 23% of the time. 150, 12%. When you get to 225 ADR, which is what we extended yesterday, that only happens 2% of the year. So to get that moving is something either fundamentally changing with the currency, or it is a extreme stretch by the banks to reach for liquidity or to trap people or to take out traders. In that case, when they've done that move, what they need to do is take profit on it. And you tend to get at least a pullback. And it doesn't mean because you've got an ADR extension, it's going to pull back or reverse. What it means is the market is extended so far, you would expect some kind of profit take or accumulation to form. Yeah, and that's what we're getting. We're getting the accumulation this morning. And after the accumulation tends to come the opposite move. However, today we've got CPI, and CPI will move every single currency in FX today. So again, it's an aggressive position, but it's risky. It's very risky. But with high risk comes high reward. Yeah, when I get out of this position, I'm going to be banking 1.2%. And I can bank that in one candle when the news comes out. So that's my decision-making process. Is the better the idea, the more aggressive I'll be. But I'm not trading this account the way that I normally trade my accounts because it's prop, and you can't trade prop in the same way as I trade because of the limits. So I have to use different strategies. And again, my choices of when I get in aggressive are going to make me pass or fail, aren't they? My aggressive positions at the moment are euro shorts, right? So I've got euro US dollar and euro Swiss. If these both play out, I'm going to bank somewhere between 3 to 5%, maybe even more. If they don't, I'm going to fail the evaluation. But I would never trade a funded account in this way, ever. But then this is the bit I don't agree with prop. Prop teaches you to trade in a way that you shouldn't ever trade. but it only does that because it puts restrictions on you. I have 30 days to do this, and I've got to do it in 30 days. Position trading could take a month for a position to play out. I can't do it. So I've got to use a hybrid. Scalping, where everyone goes in and risks 1% per position, is doomed to failure. 5 trades in a row, you've blown it. Yeah. So, you know, the way that they set these accounts up is to doom you to failure. But what you need to do, what people don't do with prop, is you either play it the go aggressive to pass, go aggressive when you've got it, stop at an amount that you're happy to draw out, and then withdraw it and then try again. Yeah. Or you go aggressive to pass, and then you reduce your risk by 50% to 33%. Or you go down to a third of your risk you used when you did the evaluation, or half of the risk, so that you will never hit that limit. As long as your strategy has a long-term edge, you've got to let it play out. So when I get a 100K account and I've got to do 8K of profit, when I get this funded, I drop my risk down to 33% of that. I will only make something like 2 to 3K a month. What a shame. But what I will do is I'll make that with 5 different accounts. All of a sudden I'm making 10, 15,000 a month. Yeah, but with very small risk across multiple accounts with the same strategies. That's the way to do it. But you've got to be aggressive in evaluation because you've got a very high unachievable target. I mean, think about it. If there were traders out there that could make an 8% return in 2 weeks to pass an evaluation, right? So I've got to make 8% a week to pass evaluation because I've got 5 days to do this, 8%. 5 days for the next one, 8%. And this is what people do. They try to pass in 5 days. They over leverage. So they make 16 grand in 10 days, which is equivalent to $32,000 a month. 32% return a month. The best traders in the world are returning 8 to 10% a year. I return 10% a month, over leveraged slightly with a position trading strategy. Yeah, I'm not returning 32% a month. No one is. But this is what the prop firms try to get you to do. And when you achieve it, you go, that's what I can do. And then the third week you funded on your account, you trade the same way and you blow it because there's no way you can sustain that. There is no strategy in the world that can sustain a 32% return on an account. And if there is, give it to me. I'll give you £1 million for it. But I guarantee you, I know someone else that will give you £5 billion for it because there's investors out there that would snap your arm off for a 10% return a month. But using stop risk, it's impossible because you can never guarantee the edge of a strategy not having a losing run. And that is the problem. And prop know this. You know, that's their business model is evaluation credits. That's why they make their money. I spend 10 grand a month on evaluation. But I pull more than that out, and that's the business, isn't it? I spend 10K to draw out 25. I make 15. That's the business model. The evaluation cost is a cost of doing business. Yeah. If I spend 10K, do 15 evaluations, pass 5, get 3 of those over the line with 5K profit each, I've made $5,000 this month. That's the business model. That's the trader's business model. That's our way of making money out of it. Their way of making money out of it is losing 10 of those evaluations. 5 grand, 6 grand, whatever it is. Yeah. Failure rate of traders is 84%. 84% of the evaluation fees go straight into the fund to pay the profitable traders. And they have a massive excess left at the end of it. That's their business model. Different. You just need to know the business models. Like trading, you've got to know the mechanics of how this whole thing works. And then that's how you make money. You just find a way to make money out of it. Diamond. So yeah, sure. I'm going back to the chat now. And obviously Diamond's talking about something I was talking about ages ago. In practice, you need at least 2K. Yes, the size of your account, you need at least a couple of thousand for position trading. Because if you're getting in with 0.01 lot sizing, you're going to find it very hard to position trade. So you've got to be able to take a 0.02 to 0.04, ideally, as a minimum entry, because if you're going to do drawdown control, you need to be able to close out parts of your position. So for example, I've got nothing I can do an example of drawdown control on, but it's in the bootcamp. Go and watch the bootcamp. So yeah, a couple of grand minimum to start position trading. But don't expect to get anything more than $100 to $200 profit a month. So if you can't live on that, it's not going to work. But if you want extra pocket money, it will work. And the beauty of position trading is you only need to spend half an hour a day doing it. Not that you think it coming in here, because I just waffle on. But if I was going to do my analysis, I'd have this done in 10 minutes. You need about 5K to be comfortable, yeah. What do you do when you get annoyed by the chart? I don't. Annoyed by the charts. You mean annoyed by positions not going the right way? Nothing you can do about it, is there? There's no point getting annoyed. Getting annoyed makes you go tilt. Go tilt makes you over leverage. Over leveraging blows your account. When you've done that 2 or 3 times, you'll understand that you don't get annoyed with the charts. You just accept it. Tom Hugard's just written a really good book called Best Loser Wins. Very good book. Can recommend it. And basically, the title says it all. Don't we need to explain it? Shouldn't have got out of that, but I did. Never mind. Still going. So nice ORB this morning. Good move. This is a much smaller account. So obviously the wins are smaller, but that one got out there. And this one I manually closed. So that's the 5, 10, 15 strategy. There's a new prop that does not have a time limit. There's a few props that don't have a time limit. CTI, for example, City Traders Imperium, they don't have a time limit on theirs. They do have a limit on 1.5% risk per stop, though. Again, that doesn't work position trading. There's a few out there. Be very careful with prop. There's a lot of prop that vanish very quickly. So any new prop firm, you've got to be very careful, because the business model, as I just explained with prop, is get 100 traders to pay you $500 for evaluations. So then you have a pot of cash. So 100 times 500 is that's 50K, right? Let's say 15 of those get through evaluation. What will happen is the 15 that get through the evaluation will then probably 1 or 2 of those may get paid. As long as that covers their payout split, the 80% that they get paid, or the 90, or whatever it may be, that company's fine. When this guy goes short on US dollar ahead of non-farm payroll and banks a 72K trade with massive over leveraging, they can't pay. They go bust, they disappear. I can give you many examples of prop firms in the last 12 months that have done exactly that. So if it's a new prop firm, be careful. My Forex funds have got an FTMO, the big guys, my Forex funds, FTMO, EA, they've got loads of money. And they've also got segregated accounts. The vast majority of these prop firms do never fund you. They will never, ever fund you. You never trade a live account. The serious ones that have more limits do fund you, but they still don't fund you. My funded accounts with my Forex funds, I know for a fact some of those are still not actually being traded live. They have a portfolio risk. They evaluate you. They look at your evaluation. And the guys that passed evaluation in 5 days, so you've got 5 days to pass. If you passed a valuation in 5 days, but you did 90% of your trades passed in 1 day, and then you went for the last 4 and just made that a little extra 10%, are you a good risk? No. So they will look at your phase 2, and if you did the same thing in phase 2, they're pretty sure phase 3 you're going to blow it before you even get paid. So they won't fund you. If you got a trader that's taken 15 days on phase 1 using a fixed risk, entries at the same time every day, a fixed reward, they've got out and the strategy looks sound, and then they took 22 days to pass phase 2, they look like a good risk. So what we'll do is we will anticipate that if they carry on doing this, we will have to pay them $4,500 in the first month of their funded account. And what we will do is pay them that money, and then from month 2 onwards, we will put them into the portfolio and use their trades to actually make a profit. Because like I just said, 90% of people trying to pass prop are massively over leveraged, trying to pass as fast as they possibly can with a strategy that is just going to hit a lucky streak. That does not make investors very happy. So just be careful with new funds, because that business model is how 90% of them work. That shouldn't have got out. Never mind. Euro Swiss just about to get a reversal alert on the hourly. 15-minute just about to trigger. 5-minute you're already done. So nearly back to break even on that one. Shall I do some analysis? Because I haven't been through the FX pairs, and it's 9:45. If Euro Swiss completes the market structure alert on M15 time frame, I'll be in it. Yep, go for it. It's a risk rule. It's a high risk. It's a very high risk trade, this, because of the news. So you need to put a fib on it, and just watch 38. This level. This is where we started the second move from, the second leg. So and this is ADR as well today. So ADR 38 retracement support. We've got 3 confluences there to watch. So if we get down to there, I will be taking that position off. And I may well reduce this down as well a little bit. So I'll use that completely, and I might reduce this position because I'll be in profit on that one, just to reduce the risk ahead of the news. But if this is a fundamental shift in the Swiss franc based on what's happened to the bank, I suspect a pullback push. In which case we may only get a 38. 50 would be fairly deep on this move, I think, if it's fundamental. If this is a total knee-jerk reaction and we're going to fade and return to origin, you haven't got to worry about it. But you've got a 50-50 shot of one of those happening. As I keep saying, your odds are always the same. It's either going to do it or it's not. But it's looking good so far. So we may well get a retest. When the reversal alert goes in, we might get a retest as well. So we might find the M pattern goes. I'm hoping we just get the elevator shaft, really. And I'm hoping the elevator shaft literally just slams straight through. So there's your reversal alert, short to get in. Hopefully we just slam the 38 straight through. So I'll be watching this. Let me just quickly go through these pairs as well, because otherwise I've literally done Aussie Swiss. But to be honest, they're all the same. So like I just said, there's only actually a few to look at because everything on here is Swiss franc related apart from a couple. So Euro Swiss we're looking at now, extended on the 4-hour, extended on the hourly. Not rocket science, you want to be shorting. Aussie dollar Swiss we've already covered. The other Swissies we've got are CAD Swiss, extended on the hourly massively. Now we've got 15 minutes. We might get a reversal of the hourly. We've had the 15. So again, all starting to come back down. Those are yens. Pound Swiss. Somebody was on this one yesterday. Again, extended on the hourly, embedded. Got quite a nice divergence on that as well. on the hourly, so that looks good as well for a short, but again, all down to whether this Swiss franc move is real or not. New Zealand Swiss, we've had the 15 on that as well. New Zealand Swiss, had the 15 on that. Hourly was extended, 4 hourly, just about. We've just taken out liquidity as well. But New Zealand dollar Swiss, again, because the New Zealand dollar is strong, hasn't actually managed to make such a move down. So those are your 4 hours. Apart from that, the only other things we got extended on the 4 hour are the Euro US dollar, as you can see, extended and embedded, and has been embedded since unemployment figures on Friday. This morning, we've got decent rejections so far. We haven't managed to make a new high yet. Again, irrelevant what you think on that. It's going to be controlled by CPI this afternoon at 1:30. And Euro CAD is the other 4 hour extension. Just 70.79. Just hit the 70. I'd much rather be looking at it somewhere up here. Euro CAD as a short or a long is up to you, but COT is long. Sentiment, the entire market is short this thing at the moment, and COT is long. So this is a big long from a sentiment perspective and from a institutional perspective, but all the fundamentals are the opposite direction. So it's a tug of war. I would rather be long this because of the COT positioning and the sentiment at the moment. So, but it's not a very when you're looking at RSI extensions as well, and when I talk about elastic band theory, what we want when we get an RSI extension is for the market to have gone parabolic. Yeah, if it's done this to get to the RSI extension, what you've had is push, profit take, push, profit take, push, profit take, and the market has been taking profit on the entire move. And it can, as long as there are people to sell to, it can do that forever. When it goes parabolic, there hasn't been any profit taking. So you know you've got an awful lot of participants sitting on an awful lot of money, very twitchy, ready to jump out. This one, as you can see, we have had a strong move to the upside. It's gone from extended to the downside to the upside in, what, 4 or 5 days. But look at the price action on it. We've had some very big pullbacks in there. So it hasn't gone crazy. Euro Swiss is an example of a parabolic move. Parabolic. This is happening now because the market is going, everyone's jumping ship. I need to get out, or at least partially get out. And everyone's like, if people are jumping ship, I want to be on board, because when they jump ship, they're going to tank it. Titanic. So I want to get out. Parabolic moves that go on into RSI are much better for reversals. Parabolic hits of ADR are much better than ones that creep up to ADR and do this, and then they hit ADR, and you're like, well, not really extended, is it? It's just done its daily range, so it could now do that or that, or it could do that. You know, faster the move, the better. So that's not a great one, that EuroCAD. It's just been a bit messy on the way up. You know, we're basically sitting at the moment in an inside bar. So we're what, 1, 2, 3, 4 inside bars. So since that initial last hurrah went in, that liquidity got grabbed, there's no directional bias. And this morning, sellers are in control. So it's just about extended. It's an inside bar, no directional bias. We've got the sellers on side, but this, you know, when you're looking and evaluating whether a setup is good or not on the RSI dashboard, not a lot going for it, is there? Looks all right, but it's not great. If we had massive sentiment the opposite direction, it was a massive sell, I'd be, right, that looks good. If COT was massively -4, sentiment was -2, fine. But we're not. We've got COT and sentiment against us on an RSI extension to the upside. So putting it all together doesn't look good, does it? 50-50 shot. It'll work, but it's not the best setup in the world. On the hourlies, Aussie dollar yen. So again, these yens take your pick. I'm short yen. I'm short everything against the yen, so I don't want to be taking that personally. But again, from a mean reversion perspective, you know, why not take it? It could happen very easily. We've got levels here and here. So ADR today. So this propulsion move here. So we had an accumulation propulsion gap. Just draw that one in because it's inside of another propulsion gap, which is that one extended there. They pushed up, tested, pushed up, tested, pushed up. So we know there's buyers here. We're coming back to retest it at ADR. So if we get an ADR hit on this today, that would potentially be a fairly decent move. So you've got RSI extended and ADR extended. But we haven't at the moment, so not great. CAD yen, again, extended. Again, this is lots of yen strength coming through this morning. Again, typical ahead of a US dollar move, the yen powering up. So CAD yen, very extended to the downside. Again, parabolic move. Propulsion. Retesting. Yeah, so after a parabolic move, it can, you know, this is shock. This is market shock. And then they're going, what the hell? Where do we go now? I don't know. Build a book, see where we get it. Bang, come back down. But what you'll find is everybody that made this move happen institutionally will be looking to add into their positions, and they will add where they added before. So the propulsion gaps show you where the institutional money was added. Yeah, that's why it moves so fast and hard, because somebody executed large orders quickly to push the market in the direction they wanted to go out of an accumulation. Yeah, they accumulated, they pushed it again, then it continued pushing. This is a parabolic move. But so we know there's market interest along there and there. We know obviously all the way through this there's market interest long, but so somewhere around here, if we get back down to here, that's where I would probably be interested in longing it. If we could get some kind of parabolic move down, that's where I get in. But by the time that happens, the 4-hour RSI will be extended, and I'll be looking for a 4-hour move. But personally, because of the current intervention with the yen from Japan, I'm more interested in jumping in short, and that's obviously already gone short. So Swiss yen, again, this is a good example of the perfect storm. Massively weak Swiss franc, massively strong yen at the same time, parabolic move, extended and embedded beyond, we're 12. When you start getting down into the 10s and the 90s, very, very, very hard for the market to sustain any further movement. It has the reason it can't sustain down here is not because it hasn't got any money to push it lower. Nobody is interested down here. Everybody that has been trying to buy this move has given up. They tried to buy it, they stopped out. They bought 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 it. Screw this, I'm not doing this anymore. The guys that are pushing this down now have no more orders on the opposite side to take it, because everyone's like, don't be ridiculous. I'm not standing in front of this freight train anymore. So when they run out of liquidity, i.e. buyers down here, they will start to take profit on the move. Encourage some more buyers in to put their stops there. So what we will do is we will push back up into the places where they started the moves, accumulation, propulsion. Yeah, so we push back up and down. So RSI extension to the downside massively. And look at the 15-minute. We've been embedded for 24 hours pretty much. Hourly. Again, levels we very rarely see. We haven't been down here for months. But, you know, when we got down to here, we had a push. And it took another leg to get it back up again. When we got down to here, big push. Here, big push. Here, push. Push. Yeah. Where we are. What do you think's coming? Yeah. Think about it as a bank, right? I've gone short. Think about what I just did. Me as a human being, right? I went long. I was sitting here with whatever I was sitting with, $1,200 of profit. I'm getting twitchy. Yeah. How twitchy do you think the banks are now? Sitting on that much profit on that move, that large. Yeah. They're short. They've got a pot of cash. Banks, as soon as they hit the buy button, the banks are going to go ka-ching. As soon as the banks go ka-ching, it pushes because they get out of a large volume of orders. The next bank goes, oh, our P&L just dropped. Quick, get out. Ka-ching, and elastic band theory. The bigger the stretch, the faster the snap. We are stretched, aren't we? So it's a good looking long opportunity. But is this a fundamental shift on the Swiss franc? I don't know. Those are any questions you can answer by having a go and seeing if it works. Got as much chance as everybody else. US Swiss we've covered. Pound Swiss we covered. Pound yen is the other one. So again, all these yen extensions coming down to a potential support, but I'd much rather that. Again, prime example, propulsion, profit take. Yeah, Euro Swiss. You look at the pullback on that, it'll be a 38. That's why I'm saying today on the Euro Swiss, watch the 38. If this is a move where they're going to continue it, we're going to get a very shallow pullback before we pop. Yeah, watch that. Pound Swiss, pound yen rather, New Zealand dollar yen. Again, all these yens, I'd rather be short than long. So I just haven't got the bottle to take it at the moment. I hate going against COT. And if you look at all the yens, well, you just look at the yen basically. The entire market is short. The big boys are short, and I don't want to go against them. So I want to be I want to be short with them, basically. But I haven't found an opportunity to get in. You know, there wasn't really anything that made me light up wanting to go short on any yen pair at the moment, and obviously should have done, but just a bit wary of the yen. US dollar Swiss. Yeah, no idea. This is going to go that way or that way when the news comes out. At the moment, big move to the downside. So Swiss franc at the moment is having a bit of a rally, but whether it can sustain it today, we will see. So that's everything that we've got on the RSI extensions. Obviously, ADRs, we're still flat, nothing there. Still no monthlies hit. Where are we? 12th of the month. So again, nothing's hit on the monthlies. When you start getting these lighting up, you want to pay attention to those because it's moved its normal monthly range. So therefore, we tend to start either stalling out or pulling back, but nothing's there yet. So that's a quick overview of those. Pretty much in line with what we're seeing. So I'm just going to sit in what I'm in and flip-flop until the news. I haven't got any choice. Oil's doing well still. So that one I got out of, so I've taken 3 on oil. Got out of that one, and I'm holding this one. Actually now that we've had a push today, US dollar yen, so a load of RSI extensions just lit up, all yen. US yen, pound yen, euro yen, and CAD yen, Aussie yen, all yen. Again, it's all these yens. So yeah, oil. I'm just going to move this up to break even. There's no point in risking this now. So it's going to take an ADR hit to the downside to take me out today. And if it does, it does. But I'm trying to get a runner up into the highs. So I'm looking for a 125 ADR. So if we get that on the news, that'd be lovely. So that's 0.5% banked. I banked 0.3 on that yesterday. I banked something on it last week. So if I can get that moving, that'll be about 1.5%, which would be lovely. If COT show the big boys are short yen and we want to trade with them, doesn't that mean we want to trade short the yen? So long anything against the yen. Yes, and this is the problem with the yen. The big boys are short the yen. So the problem I have with this is the yen, the Japanese intervene every time we get a push against the yen, which is what's making me really wary about all the yen pairs at the moment. I want to be short everything yen, yeah, because I'm expecting intervention, and I'm expecting nothing but the yen is so downtrodden. You think of an oscillator, right? The yen is so unbelievably extended to the downside at the moment, from an economic point of view, a COVID point of view, a fundamental point of view, a bond purchasing point of view, an interest rate point of view. It's just in the floor. They have the power to intervene to give it pops. And that's what they are doing. And they've done it 3 times so far in the last couple of months. I don't want to be in line with the big boys, i.e. longing things against the yen when they have the power to move that like that. And every time they do it, it's like swatting you on the head. And as soon as they do that intervention, what happens to the market is it goes, all right, sorry, and it tends to drop from there. So the COT positioning on it at the moment is the opposite way. And it's all everything is contradicting with the yen, which is why I'm staying clear of it at the minute, because I really can't time it, and I'm getting mixed messages from market participants and from Japan when they keep tanking it, or pumping it rather. So they're pumping it at the moment. They're intervening now. They're pushing the yen. Yeah. So, like you say, if COT are short it, what they are doing is taking long positions on anything like that. Everything yen, they are taking long positions, which means they are shorting the yen. But the Japanese keep pressing a button to buy the yen. By buying the yen, they tank everything against the yen. Yeah, all these intervention moves that we keep seeing happening, whether it tanks massively, they're all caused by the Japanese hitting that button. Yeah. So I can't bring myself to be on the side of the big boys, because these boys are bigger. It's a country. And banks get it wrong, don't forget as well. They're not always on the right side. And you've also got to say, when you're in a bank taking speculative trades, you're position trading, same as I do, on a different scale. You're doing it differently to me, but you are trading. You don't trade a currency, a setup. You trade a portfolio of money, and you will have exposure. So they will be taking short-term speculative moves or medium-term speculative moves, probably on the monthly, to make profit when the interventions aren't going. But you will find when the interventions happen, that COT bias will flick further up the chart, because they will all get out of those positions. They will have to, but they will be making profit hedged on other positions against the yen. So, and other instruments with the yen as well. So there's instruments like commodities when the yen pumps, which will go the other way. So they'll have hedges in place as well. So this is what I say about COT on the website. This is not a timing tool. This is a sentiment tool. You don't know if they're holding that for a week, 2 weeks, a month, or a quarter. Yeah, COT flips quite quickly sometimes. Most of the time, you'll see nothing more than a 5 to 10% change every week. But every now and again, you'll get a flip fast. And this is the sort of thing I think at the moment which will flip fast, and it will be them just getting out of those positions fast when they get an intervention against them. They're long at the moment. if this skin goes like that for 3 days solid, I can guarantee you a lot of them will be scaling out of those positions. We just don't know when they got in. If they got in here, they're still in profit, aren't they? And this is why I've got this folder at the moment, which I've got to go through, and it's on my list. Euro Yen ADR hit. I've got this folder. I can't show you it. There you go. I'll open it up. I've got this folder called COT Historical, and this is all the historical COT positionings going back to 2003 on a weekly basis. So I'm going to build a database with this so that I can backtest historical COT data. This is on one of my to-do lists. And what that's going to tell me is when they flipped. So if they got long, for example, on the yen, or got short on the yen, for example, back here, it makes total sense that they're short now, doesn't it? Because they're still in profit. Yeah, they've been short the yen all this time. They got slammed, but they got slammed and they're still in profit. So it doesn't matter. What they're anticipating is the Bank of Japan not being able to intervene as much as they want to. And that's the thing we don't know. We just have a percentage. We've got no idea how long that percentage has been in place. We've got no idea what the positions are, actual levels are of that positioning. We just know that the more than 70% of the institutional, speculative, non-commercial traders in big companies are short on the yen. So it doesn't help us in that respect, but we know that they are right. And that's the whole point of this table. We know that they are right the majority of the time because they're the banks, they're the institutions, they're the pension funds, they're the hedge funds, they're the guys that know what they're doing. We know that these guys are retail are wrong most of the time. So if they are short this and these guys are all long something yen, then we know that we want to be on side with these guys. So you just take their position when these guys are going the other way. And most of the time you will find that that will play out. So New Zealand dollar CAD, for example, you look at the big longs and big shorts at the moment. We've got the Euro CAD and the New Zealand dollar CAD. Yeah. So if you'd have longed the New Zealand dollar CAD at any point recently, on any pullback, you're fine. Because all the markets have been doing, because everybody is short, yeah. New Zealand dollar CAD, everybody's short. 91% of people sitting at home right now watching this are short New Zealand dollar CAD. Yeah. So they've gone short, been liquidated. They went short, got liquidated. They went short, probably going to get liquidated, aren't they? I would imagine this afternoon you will find every single short position, because the 91% of the market is doing that right now. Where is their liquidity? There and there. If you're an institution and you need money, where are you going to go and get it? It's all sitting here, here, and here. So what do I want to be doing? Longing it. Because everybody that doesn't know what they're doing is short, and everybody that knows what they're doing is long the New Zealand and short the CAD. So it's not in their interest for New Zealand dollar CAD to go anywhere but that way, because the big market participants want the CAD to go down, which means the New Zealand goes up. The big market participants want the New Zealand to go up, which means the New Zealand goes up. Yeah. All these guys who get it wrong 90% of the time are going the other way. So I want to be long. What I don't know is whether I want to be long now, here, 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 or here. I can't time it. There's nothing to say that they won't pull it down here, make a new low, entice more shorts in, push back, pull down into this propulsion gap, entice more shorts in, which means they're going to be 3 times as much money sitting there, there, and there, and then pop it. I don't know. It's not a timing tool. Sentiment is used for directional bias only. I haven't got a clue whether they're going to do it this week, today, or next month. But I do know that at the moment, retail have got it wrong, and non-commercial institutions 90% of the time have it right. So there's still only an edge of 90% on it, 80% maybe, and you don't know when. But that's the whole purpose behind sentiment trading. And when you have the fundamentals on your side as well, so with New Zealand dollar CAD, for example, let's look at the bigger picture. We've got all that sentiment on New Zealand dollar CAD there. If we had, which we haven't at the moment, interest rates as a positive, CPI as a positive, and GDP as a positive, and in unemployment as a positive, that is going to be a much bigger figure. Yeah, so you'll add a 3 onto that. That'll be a +8. So you've got these guys on side and all the fundamentals on your side as well to go long on it. There's absolutely no reason you should ever hit the sell button. Even if RSI gets extended to the top, wait for it to get extended to the bottom, or wait for an ADR hit, or wait for an hourly, or wait for an M15 RSI extension below. But stay in line with what we're expecting this thing to do over the next month to quarter. Month to quarter. We're expecting it to go long. It's going long. Everybody's long. Don't go short. And that's exactly what I did wrong before Christmas. I played the play I've been playing for the entire year, which was pulling back every single pullback, Aussie New Zealand, I was long in it as much as I could when I got a signal and I had exposure allowing me to. And I did exactly the same there. What I didn't look at was the fundamentals and the cop positioning all going the other way. And that's where I got murdered. So hence me building this tool to make sure I'm sticking on the side as much as I can. You know, and no trade is ever going to, I'm not going to pay attention to this all the time. I'm going to see the setup of the century long on the pound US dollar and I'm going to take it. But if I'm going to take it, I'm going to use a stop because I'm certainly not going to try and position trade it. I got burnt there recently and I won't get burnt again. As much as I can. Just put it back on DAX. Back into this propulsion. But I'd be a bit careful of pulling back to source today ahead of the news. So what's 1:30? Right, so that's all for today. I know you've talked about that multiple times, but yeah. I have to repeat myself in here. I'm not worried about doing that. Because there's different people in here all the time asking the same questions, which is fine. I like doing it as well. The more I say it, the more I do it. And that's part of the reason I trade live, because I'm accountable to myself. So I make a lot, my other accounts, I make more stupid mistakes on my other accounts that I trade that aren't in here because I'm the only person accountable for it and it's my money. So doing this is good for the bank balance because it stops me making stupid mistakes. Saying that, I am very worried about Euro US dollar today. I've got a horrible feeling we're going to dump the US today. I've got a feeling it's going to happen. I'm kind of praying to the Forex gods that we can get a strong US dollar move ahead of CPI that will allow me to scale down these positions. But equally, I'm also hoping I'm wrong and we're going to get a strong move US in CPI and we're going to stick a 150 ADR in which case that is going to very quickly turn into a plus 3 to 4K or more. But those are the risks. So we'll see. But nice ORBs today anyway. So lovely ORBs. That's three sessions on a trot. We've had positive ORBs. I've banked just shy of 6K. in the last three sessions. So very good. Hopefully that'll continue this afternoon on the Nasdaq. I'll be back this afternoon at 1:20. So ahead of the news, I'm not going to do the 2:20 session as normal. I'll come on at 1:20, depending on what happens in CPI. If I'm still around for the open, I'll trade the open as well with the ORB and see what happens with that. But yeah, I'm going to come on for CPI and we'll see what happens because it's going to be quite a big one. You watch 1:30, it'll jump up by 10 pips, jump down by 10 pips, and won't go anywhere. Building this up to the biggest news event of the month, and it's probably going to be a damp squid, and we're not going to get anything. But we have no control over that, do we? They do what the hell they like. Euro Swiss, just retesting right now. So we are just coming back up into retest. So hopefully we'll get that nice M pattern out of here. Somewhere here, could be anywhere. So when you're looking at retests, they are from the high of the reversal alert to the low of the box. So anywhere in here is classed as a retest as long as we don't make a new high. If we make a new high, I'm stopping out because I'm wrong. So let's hope we get a retest on this and get a push down there before the news. Would be good. Right, I will be back this afternoon, 1:20. Anything you need, come in the Telegram group. I will be in there. And have a good morning. I will see you 1:20.